is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. I'm coming to you live from Gibbs Beach, Barbados. Andrew, I'm taking a well-deserved vacation from the family. I hear there's a couple feet of new snow on the ground in Toronto, so I'm very glad to be away from that. But this isn't a weather report. We're here to talk about an exciting topic, which is Solana. And this is, something that we've had a lot of conversations about in the past. Solana has emerged as sort of main competitor, you could say, to Ethereum as a high throughput layer one blockchain that's grabbed the attention of a lot of developers and a lot of users. It's the platform that has some of the highest transaction throughput, some of the lowest fees, and some of the assets that I think have gathered a lot of attention, including the President of the United States launching his own token on Solana. So it's a topic that is very hot at the moment, and we've got the perfect sort of guests to talk a little bit about Solana as an ecosystem, the technology story, the investment case, and also how their business is positioned vis-a-vis all of that. So thank you very much to Leah Wald for joining us, as well as Max Kaplan. So Leah Wald is the president and CEO, and Max is the CTO and the head of staking for a company called Sol Strategies, which is a public company based that trades on the Canadian Stock Exchange. Leah is an accomplished entrepreneur with deep expertise in alternative asset management and disruptive technologies. She's the co-founder and CEO of Valkyrie Investments, where she led the firm to over $1.3 billion in AUM through cryptocurrency trusts, hedge funds, and ETFs. Valkyrie's advisory business was acquired by CoinShares and its private trust division by Abra Capital in 2024. Abra, people will remember Bill Barhydt was a previous guest on our show. Previously, Leah spearheaded multi-billion-dollar investment strategies at Vital Financial and served as a partner at Lucid Investment Strategies. And she is a contributing writer for Forbes and co-authored the book Hyperwave Theory. So like many of our guests, she's a real low achiever. Our second guest is Max Kaplan, who is a seasoned technology leader and entrepreneur. In early 2017, Max joined Kraken as one of its first engineers and early employees. He eventually grew into the senior director of engineering, overseeing 60 plus engineers in DevOps and data engineering. And after spending 6 years at Kraken, Max went on to found Orangefin Ventures, one of Solana's leading validators, which eventually was acquired by Sol Strategies, which is how he ended up on our podcast today. So, Leah, Max, thank you so much for joining us.
Thank you so much for having us.
Thank you so much.
Okay, so you both have these fascinating stories, and there's a lot of jumping off parts here. Leah, your history with Valkyrie, for example, would be something I think a lot of our guests would love to understand more. But let's start first with Solana, since that's how I led the introduction. So your business, Sol Strategies, let's hear about it, but let's talk about Solana specifically. Why are you guys so excited by it?
Yeah, well, if we're going Solana first, I'm going to toss it to Max, and then I'll talk a little bit more about the Topco.
Cool. So I could take that one. So let's see. So, as you mentioned, my background was really in the centralized trading world. And, I started at Kraken in 2017. This is like before the 2017 bull run, really when it was just Bitcoin and Ethereum was just starting to really take off. And, at the time, it seemed like a pipe dream to really be able to trade on chain, right? And, it just seems so far away. And, I worked at Kraken for, 6 years and, we did some really, really cool stuff, in terms of, building out really cool tech for, high frequency trading and things like that. But, it was really around like 2023, I really started hearing more about Solana. And, I started playing around with the ecosystem, like really Jupiter, but, some of the other auxiliary systems there. And, when I really started trading on Jupiter and other Solana-based exchanges, it really made me realize like, wow, like this can actually be a thing where we can actually start doing decentralized trading, where it could actually start rivaling centralized trading. And I didn't really see that happening, and really on any other chain. And I really just started diving down the rabbit hole myself. And, I think to keep it high level for now, once I started going down that rabbit hole, in terms of trading on Solana, started running a validator, and then there's just been hooked since. And that's what I'd say for now on Solana.
When you started, you said you were working for a centralized exchange, and I think a lot of people, even in the early days of Ethereum, were really excited about the potential of like decentralized applications and the idea of like decentralized trading, decentralized finance, and Ethereum was the platform where a lot of this stuff was pioneered. But a lot of financial use cases require like an incredibly high throughput of transactions, for example, or require very low fees. It doesn't make sense to be paying, many dollars of fees if you're trading an asset that itself is only a few dollars in size, for example. So was the insight for you with Solana that this is something that could actually like replicate the performance of a central order book, the kind of thing that you were building and working on at Kraken? Is that basically was that basically the idea?
Yeah, great question. Yes and no. I think that, regarding centralized exchanges, I don't think that something like Solana really rivals, like, at Kraken, we had something called Kraken Pro and Kraken, which is really, synonymous to, Coinbase and, like the GDAX or, Coinbase Advanced or something like that. I think that, at Kraken, our latency for adding an order on the exchange was like 3 milliseconds. Right. Block times on Solana are like 400 milliseconds. What I really think, though, it can rival right now, and what it got me excited for, is these really fantastic retail experiences that centralized exchanges put out, where and making it even better, right? Where Kraken, Coinbase, all these centralized exchanges, they have these apps, that are just dead simple to use. You don't have to worry about if you're putting in a market order or a limit order, anything like that. You just kind of click buy. And when I used Jupiter, I really saw, in other Solana-based exchanges, I really saw that type of experience being able to rival those apps, but actually even better. And the reason why I think they can do it even better is really asset listings, right? Where, if you look at, some of the activity that's happened without talking about any specific token in particular, on a decentralized exchange, a token is listed right away. There's nothing that like a centralized exchange can really do to rival that experience, where like a DEX decentralized exchange is always going to have an advantage over a centralized exchange. And in terms of like the actual trading and the usability, I really saw like, decentralized exchanges being, really on par with some of these other experiences. I think the only real thing is really the lack of fiat on-ramping. But yeah, that's what I would say there.
Yeah, interesting. So Leah, let's talk a little bit about your interest in Solana and Sol strategy. So maybe just tell us a little bit about your background. I think people are always curious about like how you got into crypto. Like you started Valkyrie, but before that, were you always interested in crypto? Was Valkyrie itself always focused on crypto? Like what was the journey for you to get into the space? And like how did you end up all the way where you're running this, big public company focused on Solana?
No, I appreciate that. And Max, I realized just going to Max for 1 second, I realized the first time I bought Sol was actually on Kraken and staked it. I think it was late 2020 or something like that. So maybe some of your work got me there. But no, Alex, thank you. Actually, it goes back even further. I started my career at the World Bank. And that's kind of what got me interested in Bitcoin, because at the time I was in the sub-Saharan Africa region and they had just launched M-Pesa, for anyone that may be familiar with, some of the original fintech advances, which was really the first, SMS-based microfinance, microloan system. It was piloted in Kenya. And so for me, I was there in 2009, obviously, didn't learn about Bitcoin in a meaningful manner until a little bit later, but having seen that success, it was a no-brainer for me that Bitcoin was going to be, the next iteration with meaningful advances, unconfiscatability, permissionless value transfer, and no need for that intermediary. And Vodafone had bought, that technology, so there was very much an intermediary.
And global too, so, not just geographically located in Kenya or any other country, right? Yeah.
Exactly. So it seemed like a logical transition. So started becoming obsessed with Bitcoin. I thought that it was going to solve the remittance quarter back then, but kept following. Okay. So we could talk about this ad nausea. But as everybody here remembers, there weren't that many opportunities to dive in as a full-time career. It was really you were a trader or you were an engineer. And so I had that opportunity to work with Lucid Investment Strategies. My former partner, Tyler Jenks, in about 2017, we focused the RIA to specialize in GBTC investing for our discretionary accounts. So we still taught how to invest in Bitcoin, but as a registered investment advisor, the only security we had at the time, of course, was GBTC.
Sure.
So in 2016.
When was this? What year?
So full time, I joined around 2017, but I had known Tyler for many years prior. So it was kind of under ideation, and he had started investing in GBTC pretty much as soon as it came out, which was around 2015. So around 2016, he was starting to make more meaningful allocation for his clients. And then we teamed up and said, all right, let's become the specialist on this and really know how to make, a consulting arm, based on it, as well as just an RA that was hopefully the experts on it, right? And teaching platform, hence writing, the co-authoring the book. So after that, yes, co-founded and ran Valkyrie Investments with my former partner, Stephen McClurg. The whole team was taken from Guggenheim. So we were effectively a crypto Guggenheim shop, and was off to the races. So we, launched some of the first crypto ETFs in the United States. We launched the first Bitcoin futures ETF on NASDAQ in 2021. So really early days. The origin story, though, was to go to market with a better GBTC. And we did January 1st. But that was the origins of Valkyrie. It was simple. It was that GBTC has a lot of inefficiencies that isn't fair for investors. Let's make a better one. And then we saw the opportunity with the ETFs and dove right in. But as everybody's aware, it was a slog to get to the approvals, and we stayed in there fighting for 4.5 years, but saw it through. And then Valkyrie was acquired by CoinShares, the ETF business, as you mentioned. But that's right. We had a lot of other tokens. We had a lot of different funds. So I really learned during that time really what investors wanted and under what vehicle they wanted it. Some investors want ETFs. Not all investors want ETFs, right? Yeah. So we all talk about ETFs being the holy grail, but even IBIT and a lot of these other, the spot Bitcoin ETFs aren't on most platforms. And you can use Vanguard as an example, who's, taken a meaningful position in Marathon for many years, but still hasn't allocated to, IBIT or a spot Bitcoin ETF. Yeah. So each investor likes different vehicles. That's also due to reporting requirements, but that's what I think I learned the most from Valkyrie is not just on, structured products, but different stripes for different folks on how they like buying these products. Right. So, yeah.
So, yes. Yeah. No, that naturally leads into sort of soul strategies. So from what we, Alex and I were doing some research, and you guys obviously recently went public, and obviously the key
for a while, right? Just to be clear, there was a separate company, and it pivoted towards the Solana strategy in September of last year, right?
So yeah. So and then from what we can tell, you guys hold Bitcoin and Solana, mostly Solana, on your balance sheet, which you then stake. And then you also run a validator. And I guess is that what's the sort of core business operations of Sol Strategy, and how are you guys sort of thinking about adding value sort of beyond just holding spot Sol?
Yeah, I'll give the overview of the company, and then Max, maybe tap you in on how we're hoping to provide value to the ecosystem. Mm-hmm. So Alex is right. So actually the company's been publicly listed since 2018, and the origin stories are important to note. So it was originally called Cypherpunk Holdings, and it was really the first company that put Bitcoin on the balance sheet, effectively the first MicroStrategy, and made meaningful investments in the space for Bitcoin. Even old privacy wallets such as Samurai and Wasabi are very deep in the ecosystem. By 2021, you saw the Bitcoin ETFs coming out. So obviously us and ProShares in the United States, but before that, in February 2021 is when you saw Purpose and Evolve come out, and prior to that, 3iQ had a listed closed-end fund as well.
And 9Point.
Yep. So at that point, the thesis was a bit uninteresting to the market. but it was still a well-run business. So it remained Cypherpunk Holdings as a holding company that was investing in Bitcoin and the Bitcoin ecosystem. After the sale of my companies, I, have been on the board since 2021, actually. So I knew the board very well at Cypherpunk Holdings. We sat down and we said, all right, we're all excited about Solana. Is there a real meaningful opportunity where we could create a company around Solana?
Yeah.
And so then we decided to go all in and buy correct. So I joined in July. By September, we made the material strategy and name change to the market. And we came out as Sol Strategies and it was off to the races. But Andrew, you're absolutely correct. So the vast majority of our balance sheet, and as per the latest earnings statements that came out 2 Tuesdays ago, we had 72 million in Canadian dollars worth of liquidity. Vast majority is in Sol, staked to our validators. A tiny bit is in Bitcoin. That's just due to hedging. But everything is effectively in Sol. So we're not only staking to our own validators, but we have third-party stake for the other validators that we have. We have 3 validators, one being Orangefin, one being Cogent, one being the Sol Strategies. Each have a different game theory around them. And at this point, per other recent news around 3iQ as an example, and becoming a staking provider partner with 3iQ's upcoming staked Sol ETF, we're also pursuing more organic partnerships as well. So bringing a lot more third-party stake. So two-sided network of the validator, staking our own Sol of the validator, therefore being a more meaningful MicroStrategy of Sol, if you will, and then running a real validator business under the hood as well. And that's where Max has the heavy lift.
Cool.
Yeah. To me, it's very similar to the Bitcoin mining almost in a way. It's like Bitcoin miners mine on a prop basis and then they mine on a hosted basis, right? So it's like,
Exactly.
You can build all the expertise and facility and technology to buy your own ASICs or to, receive a hosting fee for hosting other people's. And there's all this infrastructure build that goes into that. And staking is quite similar in that respect. So like you can sort of think of it as like, staking mining on a prop basis, staking mining on a hosted basis. And so I wonder as you're thinking about the growth strategy, part of the benefit of this public company is that you can, go to market to issue stock, to raise capital, to buy more Solana as part of your hosted or part of your sort of prop sort of staking business. But then you can also bring in clients or partners, for that partner business. So looking forward, are they both sort of equal measure exciting to you, or do you see yourself focusing on one more than the other? What's the growth strategy for the business?
Do you want me to take it, Max?
Maybe I'll let you take this one. I might piggyback off of you because I have some things to say. If you don't take them.
No, please do. I would just say that, if you want to, so first of all, absolutely correct. I would see the analogy of Sol Strategies being Bitcoin miners to Bitcoin, Sol Strategies to Solana. So a staking infrastructure provider, the picks and shovels of Solana. Yeah. And therefore, when the Sol ETFs come out, hopefully we're accretive to each other. Right. Mm-hmm. And that was meaningful strategy. So to your point, at first we were itty bitty in September and we had just launched our operating business of trying to put our, flag in the sand of being a Solana validator. So it was through inorganic growth and acquiring Cogent and then acquiring Max and Orangefin that we originally got off to the races. Right. And then at this point, we're finally at a stage under Max's leadership where we're actually building out and developing more meaningful organic partnerships and organic opportunities. And I'll let Max take it from there.
Yeah. I think Leah really touched on a lot of points, but I think the points that, what we're really trying to do is, right now across all 3 of our validators, we have about 1.8 million Sol delegated, which is, pretty significant. And that makes us, one of the biggest validator operators out there on Solana. And, really, we are really trying to make ourselves known to be, really the place for institutional stake. We're doing things, like we're ISO 27001 certified, we're focusing a lot on compliance and things like that. But at the same time, also, we're really trying to do everything really, really efficiently as a business so that we can offer the best yields for our customers as well, right? And, I would say right now, we're definitely focused quite a bit on, organic growth. And, there's other things, there's other parts of the growth model that we're focused on as well. But we definitely are going to be, you will definitely see us putting out a lot more products and services around staking in general to really solidify that, and I think the recent ETF announcement is one of those. And, hopefully we're going to be doing more and more of them to continue to grow and prove out our great business that we have.
Hey, just a semi-technical question. So, not technology question, but when we launched the 9-point ETF, there's all these rules about custody and custodians that you can use, right? So you need to have a Canadian custodian in addition to an American custodian, and that American custodian needs to meet certain requirements in order to even qualify under the regulations. And so a lot of people ended up defaulting to a Coinbase or Gemini with a Seidel or Tetra Trust sort of framework, which meaning US and Canada. For staking, for a Canadian ETF provider, do they also have to stake with a Canadian entity? Is that part of, in the same way they need to have a Canadian custodian as part of the workflow, or is that not the case? I'm just curious.
Not the case. And luckily, what's so beautiful about our business, as everybody, here is learning, I should say, is that Solana is the validator business, it's non-custodial. Solana staking.
Yeah, of course. Yeah.
So, the onus, the coins still remain in that custodian. So the risk also is bared by that custodian. Yeah. So for us, it's running, the validator, but a non-custodial business where we're not holding anyone's tokens. So to answer your question, that could be bared by any other staking provider within any of these custodians. To my knowledge, to the best of my knowledge. Disclaimer, always.
And then how do you guys think about sort of staking yields long term? Obviously staking, I guess, just as a quick primer for our audience, is there to sort of secure the network. And there's a lot of debate sort of within the crypto circles whether, eventually staking yields have to be sustainable. They sort of need to come from actual fee revenue on the chain. Yeah. Ethereum sort of flirted with that a year ago before their recent upgrade when it was generating significant revenue. Solana, pretty much every other blockchain, relies on sort of inflationary an inflationary sort of staking yield, which is. It's effectively industry standard right now, so it's not really a downside. But I guess, how do you think about that sort of long term? Do you think that's going to be, do you sort of foresee a pivot to profitability at some point, or do you think this is just going to be something that blockchains, at least until we hit maturity stage, we'll sort of continue to rely on an inflationary sort of reward, and that will actually be a sustainable sort of equilibrium, if that makes sense.
Great question. This is something that's really being talked about a lot on Solana at this very moment. There's actually a SIMD, Solana improvement document that's covering this right now, SIMD 228, which is actually a proposal to lower Solana's inflation, actually based upon the staking rate that's currently active on the network. So it would be dynamic in that sense. To answer your questions, though, I think this is one of the biggest things that has changed in Solana over the past year, where Solana was really this network where, the idea of it in terms of how it would succeed would be that, there would be many transactions paying tiny fees that collectively would add up to a lot. And that thesis was one that a lot of people did not think would ever come to fruition. And now if you look at the metrics for, if you're comparing rev between Solana and Ethereum, like Solana is producing like by far the most amount of revenue, like depending upon the day, but like lately for sure, rev has been, really significant. And, and also there's been like other SIMDs out there, Solana improvement documents that have been like, trying to change the economics of staking in general. So one just actually got implemented, SIMD 96, which was originally if you submitted a transaction, 50% of that fee would go to the validator, 50% would be burned. Now 100% is actually going to the validator. And then there's another SIMD that's actually going to allow, priority fees to be distributed from validators to stakers. A lot to say that this is changing quite a bit, but I do think that the best thing overall is really that if inflation can be as low as possible and that a lot of the staking yield can come from real revenue, I think that benefits all parties the most. I think that the devil is really in the details in terms of the best way in terms of how to do that. But if you can get to a place where inflation is as low as possible, I do think that like any proof of stake network is going to need to be inflationary, and not all inflation is bad. I think that word can be used in a negative context a lot in crypto. I don't think inflation is bad, but you do want to limit it, right? And if Solana and validators can keep collecting, and the network overall can keep collecting yield from fees, and validators can distribute that out as a large percentage of overall staking yield, I think that's the best. I think that's the best world. That
I think no. There's some sort of combination. Like Andrew, we've talked about this vis-a-vis Ethereum, and when Ethereum, some of the proponents were talking about Ethereum as sort of like a more sound form of money because for a time it was deflationary, and it's like, it's really interesting that there's demand for the network that's causing like a buyback and a burn function, like all that is really interesting. But like, what is the actual optimal mix that you want for like the monetary supply and policy of like a network, right? And it's some kind of combination of inflation that's so modest you don't even notice it, which is kind of like the inflation that central banks target, right? Like a 2.5% or 2% target inflation rate is meant to like kind of keep the grease in the wheels without people being like, oh my God, things are so expensive, right? Like, so having sort of a natural growth in the money supply, then there being, most of the staking yield paid to stakers is fees from network utilities, demonstrating that the thing is widely used and there's lots of revenue. And then maybe some function of a buy and burn to like kind of to counterweight the inflation from time to time, like some sort of like alchemy, sort of three-headed thing to sort of. Yeah. I don't know. What do you think?
Yeah, the inherent trade-off with fees and sort of value capture is you sort of inherently make the network to a certain extent more expensive to use. Yeah. And so Ethereum sort of, I guess, effectively destroyed its fee generating ability, but it did so to sort of to enable L2s to be much cheaper to use and to sort of try to compete with Solana on like a more even playing field. So it is an interesting sort of question, because in a high growth, you don't want to optimize for value capture too early when there's so much growth available. I actually do want to chat really quick. How are you? You guys are obviously super focused on Solana. How do you think about either kind of L2s or alternative layer ones as sort of potential competition for the for like, I guess, as Solana killers theoretically? Because
Great question again. I have some pretty strong opinions on ETH and layer twos. I think that, I don't know. They like layer twos are definitely competing with Solana. I would actually go out and say that layer 2s are actually competing with Ethereum as well, believe it or not. And there's a lot of debates on that as well. And there's other like interesting L1s out there, right? Like I think, for example, Sui is interesting. I think, for example, Monad is interesting. We monitor, like some of those, and, we actually run a Sui validator, but, like really in general, when, like it's really tough for a network to come out and get like all these developers out there really building good products and services. And, the only way a user or a developer is really going to switch chains, and really this is not just crypto specific in my opinion, this like applies to anything, is if there's really a 10x improvement, right? Like it really takes like a 10x improvement in a product for someone to be willing to switch. And I think Solana was that relative to Ethereum. Like quite honestly, I think there's apps on Solana that could not function on Ethereum, right? And it's really like stuff that is in this trading space. Other things like the DPIN space as well. Listen, like Sui, Monad, those types of Aptos, like I think they're cool. I think they're really interesting. I think it's going to be tough it'll be tougher for them to like convince developers to switch away from Solana to go onto these networks. Maybe, they'll do dual deployments. So we're already seeing that with some Solana-based applications deploying on Sui as well. And I think that's awesome. But, I think it really takes a significant improvement where I don't think it's a matter of going from, 400 millisecond block times to 300 to really move the needle, right? I think that, but if you look at in the case of Solana, and it's not only about block times, right? But just like, one thing, going from 12-second block times on Ethereum to 400 milliseconds on Solana, that's a whole different ballgame. Now, obviously layer 2s, they are changing that up, but, I think they have their own problems as well. So that's the way I think about it. really, I think that, and also too, I want to say this, that if you really look at like data from outside of like the crypto space, but if you look at like app store downloads and things like that, like one of the most interesting things to me this cycle was that you had apps like Moonshot and Phantom flipping Coinbase in downloads, which, originally like last cycle, and the cycles before that, Coinbase was like by far the highest app, crypto app downloaded. Now users were going straight to retail. Now users were going straight to those apps directly on chain, and they're going to Solana. So I think a lot of this cycle's retail has already onboarded to Solana. I think they're comfortable with it. I think that, these new ecosystems will come out, but I think it's going to take a lot more than just, like 100 millisecond block time tech to really take developers and users away.
This is
I think
like
sorry, one,
you know how like the last cycle around, Andrew, we had Ethereum and then EVM compatible like blockchain networks. Are there like SVM compatible? Are these like all these new networks?
Yeah,
Aptos and Monad. Like, can they how are they compatible with Solana? Like, how does that work exactly? Or are they just trying to create standalone ecosystems, Andrew? Which, like, to me, that's a really heavy lift. It's like you got to start from zero and build something. But if you can like draft off of the momentum from some other thing, it's easier, right? Like we saw that.
Yeah, I think there's Eclipse, which is an L2, that's SVM. I think, and then there's sort of like this other, there's Move VMs, which are kind of like the new thing. There's Movement, which is an L2, and then there's I believe, is it Sui or Aptos? I think it's Move.
I think they're both Move. Don't quote me on that.
They're maybe
yeah.
Yeah. So then, so I do also really want to ask more questions about Sol strategies, but one last question about Solana, because we talk about Solana and Ethereum all the time, so this is very, very topical. I guess, how are you thinking about? I guess, and then also, sorry, one other thing too. I think I actually totally agree with your point on, there's a bunch of really cool things happening right now, but I think like 100 millisecond block times, like it's not that much of a differentiator. I think the biggest risk is maybe something like Mega ETH, which is very early stages, but it's targeting 10 millisecond block times and just 100,000 transactions per second, and it's obviously going to be a lot more centralized than Solana, but it's in a lot of ways, obviously Solana is more centralized than Ethereum. So to me, that's probably like the one risk factor. Still very, 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 very early there. But then how do you think about on sort of a different vector, things like Appchains. So like Hyperliquid, for example, has really taken off in the last sort of, it's kind of, I wouldn't say one, but it's sort of the dominant perp exchange right now, and it's built on its own, I believe its own L1. I guess, how do you think about that, and maybe tie that into Solana's sort of quote unquote network extensions roadmap, which a lot of people kind of compare to Ethereum's L2 roadmap?
Yeah, another great question. Appchains, I think, is, I think like one of the most appealing things for any application, and I got to make one clarification, really any application at scale, is where, like, when you have an application that is just like crushing it, like, I don't know if Hyperliquid is there yet, but, like DYDX kind of got there and others did there. But, you can kind of naturally raise the question of like, if your application is like, basically using like, if like of like the network you're on, if like 50% of the transactions on the network are for your application, why should your users fight for block space with like all these other things going on, right? Where like your UX will be a lot better if you have quote unquote like sovereign block space, right? And I think like the overall end state for an application, I don't want to say like the overall I can see a world where, a lot of these like applications that are very heavily used do become app chains, right? Where it makes sense that they don't want to fight. They don't want their users to fight over block space with other applications going on. They can get lower fees. They can get higher guarantees that their transactions are going to be included faster. All those things, tie into a great UX. And how that ties into Solana and network extensions. We're already seeing some of those. I forget. I think like Mantis was doing a network L2 network extension, whatever you want to call it. I do agree with your point there that they are similar. I think that like one of the beautiful things about Solana is that like Solana isn't really anti L2. The real thing about Solana is that it's like, let's make the most use of the hardware, scale out everything. And then after that, if we want to do L2s, like fine, cool, we can do that. But we're not like limiting ourselves, where, I hate to say it, but I think Ethereum just really is with, trying to run on Raspberry Pis, not trying to, optimize the client to make the most use of the hardware, things like that. I think it's fine for Solana to have these network extensions, for these like apps that are really out there at scale and, they'll settle on the Solana L1. I think that's fine. I think that it's just, I don't know how many are actually at the point yet where I think it makes sense. I think there's a lot more the network can do to further scale up, with things like Firedancer. I don't want to go too deep, but even just scaling up CUs and things like that on Solana. I think there's a lot more that we can do to continue to scale the L1, but I don't see it as like a bad thing or anything.
It seems like there's a lot of like wood left to chop in terms of like building out Solana infrastructure, and like that's an area where Sol Strategies is very much focused. But I wonder, like, as you think to the future, are two of these things interesting to you? Number one, diversifying or adding to Solana, Sui, Monad, Aptos, whatever, things where you think like you have the technical expertise and the financial expertise to bring something like that to market. Alternatively, would you ever look at the ecosystem around these assets where it's like, in addition to owning Sol as a balance sheet asset, providing staking infrastructure, maybe we look at the asset or the application ecosystem as well, right? Because I think both are interesting strategies. I also think that people who invest in corporations, publicly traded companies, often are unable or unwilling to like go into this asset class themselves, especially on chain, and do all this crazy stuff, Max. And Leah, like you're solving a problem here for most people by giving them something that is convenient and is in the regulated market and is publicly traded and blah blah blah, right? So like I'm wondering, as part of that strategy, if you look at either diversifying not away from Solana but adding stuff or looking at the application ecosystem around it, right? Especially as like if an ETF comes to the market, yes, you can be a provider of infrastructure to them, but in a way they also offer another option, just own Sol. So like there's all sorts of things you can do to kind of add more value within the corp within the corp structure. Sorry, that's like 5 questions, but Leah, maybe you want to take that one.
Yeah, no, I'll start and then I'll toss it to Max and he knows why. So you nailed it. It was never our game plan to be a NAV play. I think that's uninteresting. What's important is to be the best technology company that we can be. So we want to be the best Solana technology company in the market, in the publicly traded market. If you want to invest in Solana technology, you think of us first. And that is more all-encompassing than just running Solana validators. So hence all these new opportunities. And two that you mentioned that are, broad strokes that I'm going to toss to Max is that it needs to be deeper. So Max actually just launched a Solana specific staking app, and also something we're extremely focused on that no one else is, to my knowledge, especially not, any of the providers for the ETPs, even though they should be, is compliance and reporting tools as well. So Max had mentioned we're ISO compliant. He can talk about what that means, but our validators are. Or right now, OrangeFin is, and we're extending it to the rest of our validators. No one else does that. So it's creating this comprehensive suite, that is a robust Solana validator infrastructure company, and then having the tools to branch out further than that. But yes, therefore, when the SOL ETFs are out, which is wonderful, and I hope it's soon, and we're supporting and here to support further, right? Then you also have this equity, this company that's you're betting on our ability to build tech and be meaningful in the Solana technology, as a company. But yes, Max just put out a Solana staking app. So to your point, actually putting out apps as we speak. But Max, Can you tell us about it?
Yeah, sure. And I think to answer your question too, Alex, we do run SWE validator, like a SWE validator, but our core focus is exactly what Leah said. We want to be a Solana focused technology company. That is who we are. Listen, we might pay attention. We are paying attention to these other networks, but we are a Solana focused company. That is what we are. That's what we want to be known as. And we are going to really go all in on Solana, right? In terms of, what Leah was talking about, we're really we are trying to build, not an institutional grade staking business. I don't even want to say trying. I think we are, right? But, we're doing a lot of things there. One of the things that we did recently, we launched really the first ever, and just to talk about the Solana mission, we launched the first ever mobile app that allows you, dedicated mobile app to native staking. And we actually did that in the Solana mobile store first intentionally, to actually target Solana mobile users. That's going to come out in Android and iOS soon, trademark, but it'll be coming out soon. And also too, exactly as Leah said, we're really focused on, the top-notch compliance for institutions, right? We really pride ourselves on being one of the most transparent operators that's out there. We have entire Dune dashboards that out there detailing our revenue. We have a real-time dashboard. You can monitor OrangeFin's revenue made in real time, watch it create blocks. You can do the same thing with Sol Strategies, a little bit different. We have, on 2 fired answer validators. And we also have transparent trust page. Anyone can go and download our ISO 271 certificate along with all of our policies, right? To answer the question a little succinctly, we do want to be known as a Solana tech business. We are going, really all in on that, making some small bets here and there elsewhere.
Yeah. Well, I think it's a really sensible strategy. Andrew and I talk on the show a lot about how the people who are debating Solana versus Ethereum sometimes are losing sight of the bigger picture, which is that for most assets and most applications and most people in the world, they're not using any blockchain at all.
Yeah.
So as much as maybe there are communities online that are at each other's, are in conflict or whatever, the reality is that the bigger opportunity for anyone operating in this space is always to grow the pie. And I think, as we saw the last time around, if we have a cycle where there's real utility in application development, then block space is going to be the thing that's in short supply, and people are going to be looking to different chains to optimize and scale whatever they're doing, right? So like, I think it's a positive sum thing. As a related point, I think that as in the same way that very few assets and users are on chain versus say off chain, most investors don't have ways to get exposure to the technology companies that are being built around the underlying sort of public good of the blockchain itself. And there are some examples that are exceptions to that. Like if you buy Coinbase, you get exposure to Base, the chain, and you get exposure to the piece of the staking yield that they keep for providing that service. But like there's zillions of other kind of companies that are doing interesting stuff that people in the public markets at least can't get access to. So having an option in the public market that is both a way to get exposure to the asset class, which for some people is challenging. Maybe it's because they're an advisor and they can't own, assets on chain or open a Kraken account, for example. That's solution number one. And then solution number two as well. But there's all this other stuff. It's not just about getting exposure to the asset in a convenient package. It's getting exposure to the companies and the business models that are being built up around crypto, right? So I think that you guys are definitely like on the vanguard of that in the public markets. I think that probably in the next year or two, there's going to be a lot more public companies. Fold just is going public tomorrow, I think, in the US. I think that was publicly made public. So that's happening Wednesday. BitGo was asked to go public. So you're starting to see some of that. But like the more companies that are in the public markets that are doing this, I think the more general attention there will be on these different investment opportunities, right? So thank you very much for what you're doing and for your time. That was over 45-minute long show, which is on the longer end for us. I feel like we could have kept going, Andrew, but we'll put a pin in it there. And wish you the best of luck with the next sort of stage of growth. And we hope to have you both on the show again soon. So thank you both very much.
Thanks for having us.
Thanks so much for having us. Awesome conversation.
Yeah, for sure. All right, that's it for this week's episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. Make sure to like, subscribe, and to share the podcast. Helps others find it. Helps us to reach new people. Until next week, take care. See ya.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.